The Fed set everything up perfectly in December for the markets to rally back. We have seen the all clear from them. Is there anything that they can do this week to either screw that up or to continue that policy? Rich, what do you think?
Well, there's plenty they could do, whether they do it or not. But look, I think there's always a question of how much transparency is the optimal amount of transparency. My personal opinion is the Fed has gone way over, and they're actually too transparent. And what that's happening is everybody's living on every word, every sentence. When we're parsing sentences in Fed reports, that's hardly good policy. That's hardly good transparency. So I think we've gone too far. And I think what that means is people have a certain feeling that they have an element of certainty about what the Fed is going to do.
Correct the record here. We were always parsing sentences and periods and adjectives. And the difference now is that we actually have numbers. We were translating sentences into numbers. Now we have numbers and sentences.
Well, that's fair. That's
I just want to
fair.
remember the past.
I was trying to keep you informed.
Point of information, sir.
But I think that I would argue there's too much transparency. It's getting silly, and that there is a positive side to being opaque. The positive side is that it forces an element of risk-taking. It forces an element of rational decision-making in the economy. And when you think you have too much certainty and you know what's going on, bad decisions get made. And I think we're seeing that. And I think we've seen that for a while.
Yeah, I would say another benefit to opacity is it shows some humility on the part of the Federal Reserve.
Yeah, exactly.
Because it's clear the dot plots, in my opinion, are largely met with derision among institutional investors. I mean, no one views them as any sort of really predictive, given its record over the last couple of years. I think the Fed gets itself into trouble when it uses terms like autopilot, when it uses terms that suggest that they know better than the rest of us what's going to happen. Instead of, in my opinion, over the last 10 years, we've relied too much on monetary policy to try to solve all of the world's economic ills. And it's much better to just view it as what their primary mandates are, which is low inflation and strong employment. And if you look at it from that perspective, I just wish the Fed would relax. There's no
relax. Jason,
there's no rush to do anything.
They're going to relax. I wonder if we could pivot the conversation to the pivot, which is, first of all, I think you disagree with the Fed, right? That growth is coming down below 2.3. You probably have a stronger GDP built in, no?
We might, but I would also say there's very little risk in them really just going to the sidelines.
So you're cool with...
I think the Fed is benched for this year. I think they're riding the pine. I don't think there's any chance of them tightening. Right now, the odds, I was just looking at this over the weekend, I think the odds of the Fed easing now, market odds, I think, are 26% between now and the end of the year. The odds of them tightening are close to zero. Now, that may not be correct, but I'm just saying.
Those are the market odds.
Those are, I mean, they might be, forecasting the right outcome. But it seems to me that if I were them, I would just try to stay out of the picture. To Rich's point, I would just go dark.
Right. I mean, there's no greater consensus right now than inflation is dead, gone, and never coming back. All we need is one bad inflation number, and the whole thing will become topsy-turvy again, and nobody will know what's going on. They'll think the Fed, those probabilities are going to start changing.
Yeah,
I mean, and it becomes a little too much real time on monetary policy, which I think everybody knows takes like a year and a day to work, and it's not going to happen in a short period of time.
Very quickly, what happens to the markets from here? We spoke earlier today with Peter Brookfar. He thinks it's all based on earnings. Do you guys disagree with that?
I think, well, let's assume that the Fed is somewhere on hold in here, so then we only have to look at one variable, and the one variable would be earnings. And profits are going to decelerate this year. In my book, that is about the only certainty that's out there right now.
More than the street already anticipates, you think?
I think the risk is that it's not that I think most people agree that profits are going to decelerate. I think there's huge disagreement in terms of how to structure a portfolio around that. I think people are very optimistic about cyclicals, they're very optimistic about financials, very optimistic about technology, and those are some of the sectors that just don't work well when profits decelerate. And I think that's where the problem is for the market.
That's the most, for 6 months, that's been the same thing people have been saying.
What's that?
Profits are decelerating. So you have to ask yourself, during that 6 months, we went to 2,300 or whatever it was on the S&P.
Right.
And we're now back to somehow with everyone knowing that profits are decelerating. We're back to 28.30.
Well-
So give me a forecast from here, because everybody else, so many people went to 27.50. Everybody that was at 3,000 for the S&P, they all went to 27.50. So now we're back to 28.20.
Right.
We going up from here to 3,000 in 2019, or are we going to be in a trading range and go back down?
So there's a lot packed into that question.
No, there's
So
not. We going
there
up or
is.
down from here?
We're going up, but not an awful lot.
3,000 or not?
And well, I don't know. Pick a number, whatever number you want.
3,000. I picked. That's why I said 3,000. That's the number.
You're not going to nail me on a number. I'm like,
I can see that. But you say, I say 3,000, and he says pick a number. It's like, is 3,000 not a number?
If you like 3,000, then
I don't like it. I'm saying, do we hit it this year?
But I think, look, I think you're going to have very
Jason,
modest returns.
do you think we hit it this year since he won?
I do, but I share Rich's hesitance to put a number and a time at the same time. You know,
well, then it'll hit 3,000 at some point.
But I think
it'll go up at some point.
No, I think it's 3,000. We're using I'll tell you how we get there.
Only March.
$172 for S&P 500 operating earnings. The consensus is 169. I think you have a 17.5 trailing multiple at the end of the year. We get to 3,005 if you wanted to actually, put a single. That's our.
I'm trying to think of another way to ask this question. Since we're not talking about the Fed really anymore, do you think we're going to go to 2,600 first, or do you think we're going to go to 3,000 first?
No, I think.
No what?
Well, let me finish the sentence.
I'm going to. I'm trying to, but you just use it for time to not say anything.
Okay. I will not say it. I believe that the market will appreciate this year very modestly. So the argument, if you're giving me a choice between 3,000 and 2,600, I think it's 3,000.
Okay.
There you go. He answered it.
And you've got like 6
way,
teeth
that's
left.
tricky.
I've only had to
By the way,
pull.
that's tricky. What would you say? 26 or 3,000?
I think we can probably go to.
Don't you have a contrarian call, Jason? Come on. I mean, you've been a huge supporter of the tax cuts. You told people to jump back in December. Aren't you looking for better GDP, better profits, and a better stock? Isn't that at the core of who you are?
But it absolutely is true. But the S&P is up 12% year to date.
Okay, so you think we've got it.
So I'm just saying you've gotten a fair amount of.
Fair enough.
The risk reward has changed.
Right. So, but I'm certainly not bearish, and we are different to the extent to which we don't think we're mid-cycle or late cycle. We tend to think we're more mid-cycle. Or certainly not as late in the business cycle.
The Fed's going to 2.3% GDP. You think they're wrong?
No,
they're actually going lower
for this year. But I do think if you knock some of these pins down in terms of uncertainty, the economic growth can last a lot longer than people think. There's no reason to have a recession in 2020 or even 2021.
Okay.